Hi, everybody. Welcome to Winsight Live. Glad you could join us today. We've got a really great show today with Mike Fogarty, CEO of Choice Markets, joining us here in a moment. Before I kick it over to Phil, a couple of news items we're at work on today. HelloFresh released their second quarter earnings. Customer count up 47%, orders up 81.7%, and meals delivered up 98.5%. That's all in the US. Their US revenues up 114.3%. Interesting tidbit from the conference call, the division of food at home and food away from home, which was normally thought of as 50-50 before COVID came along, 2/3 at home, 1/3 away, according to their estimates. Late yesterday, Grocery Outlet reported Q2 sales up 24.5%, comps up 16.7%. Company is seeing a lot of opportunity in the disrupted supply chain, both for buying from a wider range of suppliers and talking about digital customer engagement. And finally, Kroger Ship, which is Kroger's e-commerce ship-to-home service, announced this morning a partnership with a Paris-based third-party marketplace company called Miracle. That's going to add 50,000 items onto their online site for ordering and delivery. When it launches this fall, that's going to kind of put them into the group with Amazon and Walmart. They're going to try to sell everything on Kroger.com. Over to you, Phil.
Sure. And before I give you my one rant for the day, and I'm only going to do it once, Grocery Outlet. Do you guys know how Grocery Outlet actually got started?
They were a war surplus supply.
Exactly. It was from the military. What they would buy is they would buy dented cans from the military at cents on the dollar and, sell them to distributors and so on. And then they started the whole, I love Grocery Outlet. I love those guys.
It's an interesting company with a great model.
Yeah. So here's my rant for the day. We talked about macaroni and cheese. I think it was last week, and we talked about our favorite macaroni and cheese and so on. Kraft has a new campaign that Kraft macaroni and cheese for breakfast. So what they've done is they have issued boxes, then taken off the word dinner, and put the word breakfast on the box. But here's what I don't get. This is a PR stunt like none other. They're doing it, or they did it for 3 days. August 4th, 4 days, August 4th, 5th, 6th, and 7th. That was the only time you could find those products. And they're saying that they're going to release it for real in 2021. I still like Annie's better. Okay, Jen, why don't you take it and welcome our very special guest, Mike.
Yes, Mike, we're so excited to have you join us today. Mike is the founder and CEO of Choice Market in Denver, and I'm also in Denver, so I'm very happy to have such an upscale, cool chain of the new kind of C-store in town. Just checked out Mike's third location yesterday, and it's his first with a gas station, and he's got a fourth location that's on deck for Q4. But Mike, you've described Choice Market as a new kind of convenience store. And you also said when we spoke earlier in the year about the Colfax location that you really wanted to combine the digital with the in-store experience. So I was wondering if you could tell us more about, the vibe of Choice and how it makes that, that bridge between digital and in-store.
Yeah. So thanks for having me on today. For us, we've always had this kind of omni-channel approach to the business, and we are very much a hybrid model between a C-store, grocery store, and a fast casual restaurant, really, 3 verticals that we cross. And so for us, we've had online ordering, we've had delivery through third parties, but it was not cohesive, it was not integrated. We lacked the insights into the data that we really need to create a really good customer experience. So about year and a half ago, we set out to develop our own solution that really crosses all those channels, right? So we have with our third location in mid-September, we're going to be launching a new e-commerce website mobile app, in-store kiosk, all tied to the same loyalty program, as well as native delivery. So we're going to be delivering everything in the store through one of our electric vehicles that's charged at that third location that also has supercharging as well. So for us, it is truly the next iteration for Choice. It was, as I said, it was in the works pre-COVID, but obviously, these are services that folks are continuing to, increasingly use, whether it be away from home or delivery, et cetera. So the off-premise model, it was always built into our business. Now we just really wanted to provide a really high-level digital experience. So yeah, all of that's launching here in mid-September timeframe.
Very cool. I know Brett, with our sister publication CSP and the convenience space, has a lot of questions for you. So I'll turn it over to Brett.
Yeah, Mike, thanks for joining us. So a few questions for you. Obviously, the C-store industry has, endured a lot of this during the coronavirus pandemic. The C-store industry was deemed an essential business, but at the same time, convenience stores are not pandemic proof, I should say. So one thing I want to ask you is, how has the pandemic affected your sales at all and the types of products people are buying? And do you think upscale convenience stores actually have an advantage right now?
I don't really call us upscale. I mean, I think we are just simply a differentiated model. Certainly we carry, better for you, organic, local options. And I guess for some people that's considered upscale. I do think our offering in general and our business model in general positioned us better than other C stores and certainly other restaurants. The grocery offering specifically, we have raw proteins, dairy, eggs, yogurt, stuff you don't find in traditional C stores. And those are the types of essentials that folks were buying especially during the height of the pandemic, right? More traditional C-store fare, candy, chips, cigarettes. I mean, these are things that, in fact, I don't think really, service that customer per se. So, for us, I think it was more to do with our business model and even the prepared food. Yeah, we took a hit on our lunch business and catering, especially our first location, which is Central Business District, Denver. But our deliveries picked up, and because we were already doing deliveries since day one, we weren't pivoting. It was just more of the same, and people trusted that they're going to get their deliveries on time, fresh, in great packaging that keeps the product great, in terms of temperature and consistency. So for us, we didn't really pivot per se. Certainly we did offer some more, like I would say, basic house essentials, like obviously toiletries we stacked up on, and other kind of bulk items that we typically don't carry, more conventional items, because we knew folks are more value oriented during the pandemic. So there are some products we brought in that we didn't carry before, but it wasn't like a huge foundational shift for us by any means. So.
Sure. And so your note about delivery right there is kind of a segue into my next question. So you mentioned you're really focusing on the whole digital component right now. During the pandemic, what has been your customers' primary means of purchasing from your stores? Has it been through digital delivery or still a lot of in-person over-the-counter stuff?
Yeah, I mean, I would say it shifted to delivery, a big chunk of it. We still had the ability to do click and collect in our store, but again, the tech wasn't really where we want it to be. And so, we still had folks that were ordering delivery in the local neighborhood and coming in and grabbing a few things in the store, even during the pandemic, at the height of the pandemic here in Denver. But for sure, that percentage of delivery revenue, it shifted for sure upwards. I think typically we were doing around 30% in deliveries. It shifted up to like 40, 50. But now it's coming back down as folks, especially summertime, are getting out. The numbers in general in Denver and Colorado have subsided to a certain extent. So For us, I think that's the beauty of the model. We can kind of shift and focus on whatever channel is performing the best, really, for us. So.
One more question on my end before I stop hogging up all your time, because I gotta let my colleagues ask you some questions too. So, arguably the biggest issue in the convenience space right now is hiring. So many traditional convenience store operators are struggling to keep staff members on board and to bring in new ones. Obviously, you don't have that traditional operation like you'd see to 7-Eleven. So, what has your experience been like with retaining staff and hiring staff during the pandemic?
Yeah, I mean, certainly we were fortunate enough that we didn't need to furlough or lay anybody off. Sales did decrease, but not to a point where we needed to reduce our staffing. We did reduce our hours, so there was some changes to the operations. I think for a lot of people, they were already on board with Choice before the pandemic. They see the vision of what we're trying to create. We pay probably 30-40% higher than the average wage within the C-store industry. So that certainly helps. We offered bonus pay during the pandemic, paid time off if you felt sick. We increased our discounts for our employees to 40%, which is basically at cost for us. So we did a lot of things to make sure they understood that they were valued. We understand this is risky it's a risky, scenario, right? At the height of the pandemic here, you're talking 2,000-3,000 cases a day type of thing. We're right downtown Denver. You have Uber Eats drivers coming in and out. So certainly, they were putting themselves in increased risk, but we haven't had anybody left. I think they understand a lot of these folks just want to be working. They want to be, working for a company that supports them. And so for us, we haven't had the same issues in hiring, I would say, especially now that the stimulus is starting to dry up. Like, you're starting to see a lot more inbound because, a lot of the restaurants in Denver and across the nation are closing, and it's sad and it's unfortunate, but that ultimately there is more talent than I've ever seen, and our talent, our kind of employees tend to be more of a culinary background than a traditional kind of retail C-store background. So we're pulling from that talent pool that unfortunately has either their job's not available, or it's furloughed, or their previous restaurant is closed for good, which is again unfortunate. But it's for us, we haven't had that same challenge, I would say. So
Stuff, Phil.
Yeah, so Mike, I'm not as lucky as Jen, and I have not visited any of your stores. I apologize for that, but the next time I'm in Denver, I will come calling.
Yeah, well, sure.
So I guess what I'd like to ask is, when you look around at the C-store industry and you look at all the mergers and acquisitions that Brett is talking about every episode that's going on, you obviously have a very different niche than anybody else. You're probably somewhere a hybrid, if I can imagine this properly, between a Green Zebra and a Sheetz. And what do you think about all these mergers? How is this going to change the C-store industry as a whole, and what opportunity gets created for you?
Yeah, I mean, it's a dynamic situation, the C-store industry. Obviously, you have, the top revenue drivers for C-stores are fuel, junk food, cigarettes, and all of which are declining in terms of revenue share, and all have like pretty low margins in general. So this was already happening. Cars were getting more efficient. People were taking Ubers. Cigarettes obviously have been decreasing for almost a decade plus. Obviously healthy eating is not just a fad, it's a way of life, and it's fundamentally shifting from one generation to the next. The C-store of old was built off of the white flight during the 60s and 70s, where everybody's driving, from the suburbs into the cities, and that model made sense for a while. But America and especially our target market, which is, you know, urban millennials, have fundamentally shifted. They're moving into cities. They're, you know, eating healthy. They're shopping more, you know, per week in terms of visits to the store. You know, so for us, you know, we saw food and food service as the core to our business. Like that will be who we are defined as, you know, and so as we looked at the curation and the product mix and the business model itself, we knew that we would lean into food. It has the highest margins of all the C-store categories. It's growing the fastest. And you're seeing all the legacy players really move in that direction, but it's really tough for them to pivot, really, because they're very, very large, and they built, you know, their whole business around that previous customer that I spoke to. So, you know, the consolidation makes sense, right? Because at the end of the day, those brands have only one thing to do, which is scale and continue to grow. You know, in my eyes, at least, in order to survive, really. I mean, because the growth isn't happening organically. It's not same, you know, the business itself isn't, you know, per se growing without those types of acquisitions. So, I mean, you have that piece of it, so, which creates, I think, a lane for folks, whether it be, you know, like us, Foxtrot, and several others, the Green Zebra you mentioned, Goodsmart. You know, there's a lot of different kind of, I guess, new age or modern convenience stores that are really more food centric, and I think you'll continue to see that. You know, and but you'll still continue to see acquisitions. So and players like Come and Go, you know, get into more different formats such as the urban format, et cetera. So, you know, they're going to continue to try, even 7-Eleven as, you know, the Revolution or Evolution stores. So they're certainly dipping their toes in different formats and models to try to appeal to that customer. But again, it can be difficult to get that brand authority or for the customer to give you that kind of license, I guess, to say, okay, now you were this brand and now you're pivoting to here. I mean, for me at least, I think that's creates an opportunity for somebody like Choice that from day one we've defined ourselves on, you know, high quality, you know, fresh, accessible food. So
how about expansion? How many Choice markets would you like to have? And you're going to stay in Denver, or you're going to come down here to Santa Monica?
Yeah. We've been down there a couple of times, Bill. Yeah, checking them out. It's, you know, the real estate's a little steep, but yeah, 100%. In this business, you have to scale, really. I mean, it's really tough in grocery or in C stores. It's really tough to be a single store operator without the backing of a franchise or anything like that, without scaling. You know, with the economies of scale from our suppliers and the volume pricing we get by going from 1 to 2 stores is significant. But, you know, you go to 2 to 4 to 6 to 8, you get into some of these national contracts, you know, it can reduce our COGS 10, 15, 20%. So, you know, for us, it's not if, it's we have to. And so for us now, you know, so we'll have 4 stores open all here in Denver by the end of the year. We have 4 to 6 planned for next year, both here in Colorado, not just in Denver, but surrounding suburbs, because we think, you know, obviously with everything going on, there's going to be some movement to the suburbs, and you know, we were already planning that anyhow, but probably expedited some of that a little bit. But then, you know, no doubt, I mean, we just hired one of our board members, hasn't been announced yet, but he, you know, he has a deep real estate background and is helping us define kind of the next stages of growth, which will include new markets. And we have some, you know, unique opportunities that are being presented to us quite a bit, honestly. So, you know, and it's not just traditional growth. I mean, we're deploying a frictionless system that, you know, we could, you know, do micro markets. We could do smaller format, you know, autonomous stores. We can get into our market pretty quickly, potentially, with some of these formats. So there's some interesting stuff. And, you know, we've also gotten approached by traditional C-store operators, even here in Denver, that have 4 to 6 to 8 stores that, you know, they want to convert from, you know, their their current brand to Choice. And so the growth could happen much quicker, especially in the C-store industry where there's a lot of independent operators. And I think they all see the writing on the wall here that like, you got to innovate or die, type of thing. And so for them, do they want to really start their own brand and their own, it's quite an extensive operation we have. So, maybe not. And so we've definitely gotten approached with opportunities such as that we're actively, looking at. So there's a couple different avenues for growth, but certainly here in Denver is the focus, but we are looking at new markets, I would say mostly in the kind of Midwest, West Coast is kind of what we're focused on.
Kat?
Maybe Kat and Brett, you'll get a Choice Market soon then.
Yeah, maybe come out to
Love
Chicago.
Yeah, well, it's again, I think I'm from Philly originally, and like I grew up probably 10 minutes from Wawa's headquarters, so like I get it. They've created such an amazing brand and loyal following that we think there's a gap, honestly, in the Western U.S. for something like Choice. So that seems to be at least where potentially we're headed in terms of new markets. So.
And taking you back to what you were talking about earlier when you were talking about, customers, a lot of their purchases moved online during the pandemic. How have you seen their shopping pattern shift? I know when we spoke before earlier in the year, you did a fairly brisk business in like the nighttime hours, and I would assume some of that has gone away since people maybe aren't out and about as much at night going out to dinner and things like that. So how have you seen your customers' shopping pattern shift? Are they coming to you earlier in the day? Are they, doing more delivery at night? What are you seeing?
Yeah, it's more normalized for sure in terms of the traffic in general. So, we would lunchtime, we would, do significant, lunch business. So you saw a huge spike from 11 to 1. Now that's again more normalized, and then a little lull in like the 2 to 5, 2 to 6 area, and then pretty steady kind of like grocery business from like 5 to 7, 5 to 8 folks that are leaving the office, going to their car type of thing. So in general, and then late night for sure, we used to be open till 3 and do like very strong business from, basically midnight on, 11 on. Obviously, not obviously, bars here are closed now at 10. Folks are going out less and less. That said, we still do see decent, volume of delivery traffic from like 10 to midnight, which is when we close now. So, it's still there. It certainly has changed for sure. And we're not seeing them as many spikes, which, actually can be good for the operation. So, from a staffing perspective, you can kind of keep it a little bit normalized as well. So, but, we want that to come back, and we think it will, and the Colfax location will be open till 3 a.m., not currently, but in the next few months, we plan to get back to those hours because, again, we are, when we're shutting down at midnight, we're still, seeing a pretty significant business. So, I mean, there are still people going out or, whatever, having parties or hanging out at home with a few friends that still want to eat, a little bit later. So.
Along those lines, Mike, I wonder if you can talk about, any signals you've seen, if any, of value buying from consumers, given the worsening state of the economy.
Not necessarily, I would say, for us at least, I mean, our core customer, I mean, they tend to be a little bit more affluent. So, they're just working from home instead of at the office. They didn't necessarily get laid off. So certainly, I'm sure there is some level of value buying, and that probably has impacted our sales a little bit, that we don't, really, we do have a lot of value options. We have some traditional C-store stuff like Gatorade, Advil, Reese's, Skittles, So we do have options. Our grab and go is much more value oriented than our kind of fresh menu. It's still high quality. So for us, we try to provide options to those folks. But I haven't, seen a big, interest or request for like, true value items or bulk items. And we actually did try some of that during the pandemic, and it was mildly successful. Like some of the real, like the 60-ounce shampoo, we still have like 2-3 cases of it. So like, we expected a little bit more of that, but again, we haven't seen it, at least with our customers.
So, Mike, I was so excited for you to open the Colfax location with the electric car charging stations, and this is your first gas station. And then I'm thinking, you open this in a pandemic when people aren't really commuting and buying less gas. So I sort of have a two-part question. What has that experience been like? And then are you using the electric? Have you invested in a fleet of electric cars to be your new delivery service? And are you eliminating all third-party delivery and focusing on just in-house delivery, or?
Yeah, it's a great question. I mean, so certainly in terms of like the number of gallons we projected initially, we aren't hitting that from day one. But again, these are things that we all agree will come back within due time, 6 to 12 months. For us, this is always going to be a ramp up for this store. It's a new brand. For a lot of people, it's a new brand, especially in the fuel or mobility space. So, but we definitely wanted to include the superchargers because we see that shift happening much quicker than I think a lot of folks do, especially in the C-store industry. I think there's a thought from maybe some of the legacy players that it's 10, 15, 20 years out, and I would argue that we're probably 5 to 10 from a pretty sizable portion of America driving e-vehicles, just because the total cost of ownership is less, and it continues to be less, and the capital to buy, the acquisition cost is coming down significantly as the batteries come down. So, all those things combined, led us to make the investments, and there's some great state initiatives to help deploy these as well. So for us, it was, we want to provide that option to the customer, and they can get some grocery shopping done. They can grab a bite to eat, they can actually sit in a space that they enjoy. And so, but, and for us, certainly as we launched native delivery, we looked at, okay, just the economics of it all. And it's, with those state incentives and with, the acquisition costs coming down, we did analysis and above the monetary, reasons are just foundationally, we're very much a sustainable company. We use compostable packaging. We source as locally as possible, so for us, it was core to our business regardless. But, when you look at it, just made a lot of sense. You have no gas expense, you have no oil changes, your battery lasts for 200,000 plus miles. So all these things, reduce our OpEx as a delivery, provider. And, I think, that I'm aware of, will be one of the first in the country to leverage e-vehicles as from a native delivery perspective. And so it has this closed loop now where we, and that location is our primary delivery hub initially. So certainly it made a lot of sense to look at electric, and that's the plan, is to deploy both electric vehicles and also e-bikes for more of the urban settings. In terms of third party, we'll continue to work with all the third parties. We see that as continuing in the future. There's even we're even looking at, still being on the marketplaces, but us fulfilling the delivery, which brings down our commission. So, there's ways you can still continue to work with them outside of kind of the traditional model. So, it opens us up to new customers and allows us to continue to grow, hopefully our delivery business as well, because, we're offering the whole 2,000-3,000 SKUs. And fundamentally are getting into like two new businesses, which is alcohol delivery and grocery delivery, because previously with the third parties we were just doing mostly prepared food. So now we got those three verticals: prepared food, alcohol, and grocery, all under one kind of cohesive app. So yeah, I mean, I think for us, we'll continue to work with them, with most of them for sure.
So Mike, typically what we do, we wrap up each episode with Jen giving us some good news of the industry. It could be good news that a particular retailer is donating money to Feeding America or whatever. But as our special guest today, we're going to hand over that segment to you. So we're looking to you to give us some good news of what you're seeing happen, whether it's around Denver or any other part of the country.
Yeah, I mean, I think, you know, at least from my perspective, like during all of this, you know, restaurants were, and food service in general was just absolutely decimated and still is in a very precarious situation. You know, once PPP money runs out, you know, it's going to be, I think, another wave, right, of closures. And it's, you know, it's really tough to see, you know, but from my perspective during all this and even during the toughest times to see operators pivot, you know, and whether it be user kitchens to produce meals for hospital workers or, you know, donate to charities that are specifically, you know, funding hospitality workers. You know, we offer 20% to any hospitality worker, and we still do actually to today, or frontline workers. So, you know, that kind of rallying behind the industry, I thought was, you know, truly unbelievable. You know, here you have these operators that are on the brink of going out of business, and investing their own time and money and maybe even going out of business, but still, you know, putting everything behind helping others. And I think, you know, certainly, you know, I you know, being in the industry, I felt like that was truly unbelievable and pretty remarkable to see nationwide. I mean, these are big chains, small chains, across the board, you know, these restaurants pivot to, you know, some community action. Certainly, I think is a, you know, truly noble cause and certainly something to admire. So.
Well, that is some good news. And Mike, thanks so much for joining us today. And to all of our viewers, thank you also. Don't forget, we'll be back Thursday. Forgot what day it was for a second. Thursday at 9:30 a.m. Pacific, 12:30 p.m. Eastern. And for past episodes, feel free to visit Winsight Grocery Business Facebook page or CSP Facebook page or Supermarket Guru Facebook page. Have a great week. Wear a mask. Be safe. And if you're in Denver, head over to Mike and say hi.